Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Fintech major Pine Labs acquires rewards and engagement platform Saluto Wellness for an undisclosed sum. The acquisition will allow Pine Labs to provide corporate enterprises and brand partners with reward workflow management capabilities for their customers, supply chain vendors and channel partners.
Electric vehicle battery startup Log9 bags $40 million in its Series B funding round in a mix of equity and debt, led by Amara Raja Batteries and Petronas Ventures. The deep tech startup plans to use the funds to increase its manufacturing capabilities.
Fuel delivery firm Fuel Buddy raises $20 million in a funding round led by Naveen Jindal Group, Ravi Jaipuria Group and Nilesh Ved of UAE-based apparel group. The firm will be launching its services into the UAE market shortly.
Sequoia Capital's regional arm in South and Southeast Asia is weighing special audits of several investments in the region following allegations of financial irregularities at firms such as Zilingo and Go Mechanics, says Bloomberg News. The VC firm will work with Ernst & Young on some of these audits and will increase budget allocations to help investee companies put governance guardians in place.
Zomato pushes 10-minute food delivery service to pivot to a different model. Sources tell CNBC-TV18, and I quote, "Instant is not shutting down. We are working on a new menu with our partners and rebranding the business. All finishing stations remain intact and no people are impacted by this decision," end of quote, says a company spokesperson.
Amazon launches a dedicated cargo fleet for its India operations with 2 aircraft. Amazon Air will initially be available in Delhi, Mumbai, Bengaluru and Hyderabad and will be operated by Bengaluru-based QuickJet Cargo Airlines.
Music streaming firm Spotify plans to cut 6% of its workforce. Spotify said it will incur about 35 to 45 million euros in severance-related charges. The company's chief content and advertising business officer, Don Ostroff, will also depart. Spotify has seen advertisers pull back on spending, mirroring a trend seen at Meta and Alphabet.
Google pauses its employer-sponsored green card program. The tech giant sent an email to foreign employees notifying them that it will pause any new filings of the permanent form, leaving foreign workers in a limbo. However, it would continue to support permanent applications already submitted.
Those are the headlines we are tracking for you this evening. Indian agriculture and its allied sectors are the largest source of livelihood in the country. It is estimated that India can generate $813 billion in revenue with an investment of $272 billion in agri-tech and allied segments by 2030. Now, the sector is slowly shifting from traditional farming to horticulture and livestock production, and the demand for fresh and processed food products has also increased due to the rise in income levels, urbanization, and changing consumption habits. The government has announced several policies, schemes and programs such as a production-linked incentive scheme to boost the food processing sector, Krishi Udan 2.0 scheme for facilitating and incentivizing movement of agri-produce by air, a composite portal to provide agricultural marketing-related services through a single digital platform and more. The traditional agriculture industry is ripe for disruption that will benefit both the farmer, community and businesses. So what does the agri-tech industry expect from the union budget? Joining me now are Mukul Garg, founder of Agrim, and Ranjit Mukundan, co-founder and CEO of Stellabs. Also joining me is my colleague Arundhati. Gentlemen, welcome to Startup Street. And, let's start by addressing the elephant in the room. Mukul and Ranjit, your top 3 expectations from the union budget. Mukul, let me start with you. Agrim is a tech-enabled ecosystem for small retailers of crucial agricultural supplies that is transforming the way agri-inputs are sourced across the country. Your wish list.
Thanks, Shruti, to have me here. In terms of the wish list, wish list is very long. So the top things which remains on my mind is overall allocation. Budget allocation for agriculture has seemed flat for the last 2 to 3 years, right? So from an overall standpoint, if government takes a mandate that they want to spend more on the agriculture, that's their wish, but that is an area which can see a definite improvement, right? Specifically, there are 3 areas, right? One is agriculture infrastructure fund, right? So the allocation for that has already been close to 1 lakh crores in 2020, which was supposed to get disbursed until 2024, right? Out of that 1 lakh crore budget, right, we have seen investment of close to 8,000 crores until now, right? So there is a huge gap in terms of the promised money and what has been allocated. So if that money is getting allocated to build the infrastructure in the agriculture ecosystem, right? That should help us improve the farmer income and help the ecosystems players,
Sure.
and eventually can lead a strong innovation in that sector. So that is one ask, if that disbursement can happen faster and in larger check sizes, right? The second wish list is uh, the second wish is basically the agriculture education spend, right, which has been close to 8,000 crores from last 2 years. Uh, if we really want to do something really great at a farm level, we need to invest heavily in the heavily in the infra, like building the innovation at ground zero, right? So for that, this investment is really crucial, where government is spending huge sum at education and research. And the third piece, I would say, the ecosystem players, right, like Agrim and many other agri-tech startups, those who are actually helping farmer in two folds. One is uh, improving improving the income and or reducing the cost, right? So uh, by being strong value-added players in the value chain, right? So giving better interest rates, having a
Absolutely.
better interest rate for these companies as well should
Okay.
help, right?
Yeah,
So
absolutely. And we're going to discuss that in detail going ahead on the show as well. But let me bring Ranjit into this conversation. Ranjit, your farm and herd management system, CellApps, helps dairy stakeholders remotely monitor, manage farms through mobile devices. So what are you seeking in terms of policy reforms? Can you tell us that quickly?
Yeah, I think some of it is aligned with what Mukul just mentioned. First and foremost, a much better CapEx support, better loans for setting up milk processing plants, treating the dairy farmers on par with the rest of the agri, farmers, helping much access to better green credit facilities. For example, solar-driven cold chain, which is a big green initiative, rollout of electric vehicles in the supply chain, more biodigesters, specifically in the dairy scenario, so that you can actually mitigate carbon emission. Can there be much? I think there can be a lot more support coming from the government side. There are programs such as the National Program for Dairy Development. Can that be also be taken up by the private dairies, not limited to just the government cooperatives? Demand generation is pretty key. I see a lot of FMCG companies globally wanting to enter India.
Sure.
If the government can help Apple set shop in India, why not help some of the global FMCG companies set shop in India, so that it can generate more jobs, more skills, and all of that? And finally, capability building. The capability and skill building should not be limited just to the urban centers. So I think we need to upgrade the skill levels of folks on the rural side in terms of all the dairying and animal husbandry practices. So those would be broadly some of the things that's on top of my radar.
All right. Interesting points made there, Ranjit. But, we can also see the government taking cognizance of the importance of Kisan drones, chemical-free natural farming, and the supporting the delivery of digital and high-tech services to farmers across the country. Ranjit, what is the kind of impact have they created so far, and what more needs to be done in this regard?
Yeah, so all of what has been done so far has helped in one, better transparency. Farmers tend to get much better market rates, rates that are not manipulated by middlemen, and the cash, instead of being a cash-based economy, the money flows directly into the farmer's account digitally. These are all significant improvements from where it was earlier. The quality of the various agri-produce is going up, so that folks like you and I, if we need access to, let's say, antibiotic-free, residue-free produce, so that we can give it, in a very convincing manner to folks at home, kids at home, that has also, significantly improved. And the notion of traceability is getting strongly encouraged as well, so that people know that the food on their plate comes with a strong sense of assurance. So that we can eat it safely without having to worry about where did it come from, is it safe, and all of that. So these are some of the big improvements that all of the steps that the government has taken so far.
All right. Ranjit, one quick question again. In terms of PLI and CAPEX support, what is your ask from the government?
Yeah, very specifically, as I said, in the dairy infrastructure side, there are a lot of cold chain components that are needed, right? So if you're running it using solar and alternate energy from a carbon optimization perspective, can we get much better soft financing support at much better rates, for example, number one. Number two, from a milk processing perspective, the lot that needs to be done to encourage more processing capacity so that raw milk can be converted to processed products. Can there be much better loans available to set up milk processing capacities? And finally, as I mentioned, there are schemes such as National Program Dairy Development Schemes that are typically only targeted at the cooperatives. Can that be made accessible to the private sector as well? So from a CAPEX and PLI point of view, these should be some of my top asks.
All right. So those are your top asks on that front. But Mukul, if I can bring you back into the conversation and you could answer this quickly. One big demand has been that tax relaxation for various players across the value chain, which have created scalable solutions impacting farmers' lives for good. For instance, the onset of farming as a service and farm to fork has opened better opportunities for the farmer community to improve their farming practices and thereby the generated output. So tax relaxations will surely play a big role in empowering the sector.
See, tax relaxations anywhere plays an important role, right, to fuel any sector, right? Specifically here, agriculture has been made tax-free by default, right, for the farmers to a certain scale, right? So some relaxation on that should help. Second is the players, those who are involved in this value chain, if there is a certain tax relaxation or interest relaxation, right? So that should actually help the farmer in the long run. So I guess, yeah, that would be my answer.
Okay. All right. Mukul, Shruti here. What about subsidized credit? Low interest rate loans will certainly help businesses scale up their operations. You touched upon this earlier, but also disbursement has been slow from the National Agriculture Infra Financing Facility. Is this not one of the priority areas for the government?
See, there has been no strong execution on that until now, right? So we have disbursed only close to 6% of what was promised by the government in 2020, right? So any financing here, right, actually helps the rotation gets better, right? So in the long run, if government only focuses only on this area, right, tax relaxation is a catalyst, right, for the initial push. But when you actually do investment at a ground level, that actually helps build the nation for a longer run. So I would think relaxation on the credit cost is will fuel the business better.
Absolutely. All right. Ranjit, there are over 1,000 agri-tech startups in the country. While the agri-tech market potential in India is estimated to be over $24 billion, agri-tech penetration in the country is less than 1%. So what needs to be done to encourage more startups and deeper penetration at this point?
Yeah, I think one key part would be demand generation. For example, can all the end result of all the things that you mentioned is being to improve productivity, quality, and get in more traceability, right? And if the government can set up a good export platforms so that these capabilities can be better leveraged and better price can be fetched for all the productivity-linked, quality-linked, traceability-linked catalytic impact that we've been trying to deploy across the agri-tech ecosystem. If that can be better leveraged, if the export tap can be turned on in a big way. So I think the government can do a lot in this space. For example, as I mentioned, can we encourage, if Apple can be encouraged to make more iPhones in India, or Tesla can be encouraged to make more electric cars in India, can we get some of the large FMCG players who know how to capture the growing consumer segment? And that can fuel further adoption of some of these technologies and improve the penetration.
All right. We'll have to wrap up this conversation now, and I hope that, a majority of your demands are met, but we'll only find out on the 1st of February. Ranjit and Mukul, many thanks for joining us on Startup Street today.
Thank you.
Thank you for having us. Thank you.
So those are some of the budget asks from the agri-tech sector. But moving on, in a bid to speed up deliveries, e-commerce giant Amazon is all set to expand its cargo business segment to India. Amazon Air, according to reports, could be launched by the end of January. The cargo service will have 2 dedicated cargo aircraft with a capacity of 20,000 packages. Shilpa Ranipeta gets us a sneak peek into the Amazon Air India launch. Take a look.
There is a higher chance now that that late-night order you placed on Amazon will reach you the very next day, and this aircraft that you see behind me will most likely make that possible. Amazon has launched its own dedicated air cargo fleet called Amazon Air in India. Currently, Amazon says the idea is to enable faster deliveries and also have end-to-end control over its shipments. Currently, Amazon has 2 Boeing 737-800s that will be operated and maintained by its partner QuickJet Cargo Airlines. And each of these aircraft has the capacity to carry 20,000 shipments. Now, just because it's launching its own dedicated fleet, Amazon says that it will not stop working with its commercial air cargo partners yet. It will continue to do that to deliver to other cities beyond the 4 cities that is operating in. Now, Amazon Air, that's called Prime Air in the US, was launched in 2016 first and currently operates in the US, in Canada and Europe, making India the 4th market.
All right, with that, it's time for us to head into a short break, but don't go anywhere. Coming up next, Goat Brand Labs has been on an acquisition spree in the last 1 year. It has no plans to slow down. The startup plans to acquire 1 or 2 brands every month. A special conversation with the company CEO on the other side. Stay tuned.
Tiger Global and Flipkart-backed Goat Brand Labs has now announced the acquisition of 5 direct-to-consumer or D2C brands in India. Those include Chumbak and Imara, which is another apparel brand that they've recently acquired. And to talk about these and other acquisitions and the growth of the business in the pipeline, joining me now is Rishi Vasudev, who's the co-founder of Goat Brand Labs. Rishi, thanks very much for being with us here. First, since we're in the Chumbak store, tell us what went behind your acquisition of a brand like this, which has more of an offline presence than some of the brands in your portfolio.
Chumbak is a very strong brand. We are always looking for brands which have a great consumer connect. Chumbak is a brand which is loved both by a mature audience as well as youngsters love it. It has the width of thousands of categories. It's a brand you would love wearing on your body, wearing as accessories, building up your look of your home with. So the brand has a lot of categories that it can play in, and it's equally popular on both online and offline. So they had 50% sales on online, offline. So when we looked at Chumbak, we said, this is one brand which we can scale very fast online while they have a big enough presence in offline, and therefore it really fits into our theory.
So when you say scale, what numbers are we talking?
So we are looking to take Chumbak to about 300 crores in the next 3 years, 500 crores in the next 3 years.
That's a huge 200 crore jump you added
Sorry,
there.
I used to, yeah, 500 crores is the number that we are targeting.
Okay.
Chumbak also is a quintessential Indian brand because the icons they use, the design they use. So there's a huge opportunity to take Chumbak to the world. Okay. And one of the mission of GOAT is to take Indian D2C brands to the world. So here's an opportunity to take Chumbak in a big way, especially to the Indian diaspora, and then make it more popular with foreign audiences.
Is that the plan with Imara as well, the second brand that you're now announcing the acquisition of? If you could tell us about what kind of growth you're hoping there, because the idea of a house of brands business, so to speak, is to scale up the brands that it's acquiring.
Yeah. Imara is the first brand we have acquired, which is primarily offline. It has a big presence in the department stores with Shopper Stop.
Yeah.
But we have seen huge success with our acquisitions in the premium women's wear and especially the ethnic wear space with brands like Avishti and True Browns. So Imara becomes the third brand in that space. We're confident with the performance that these 2 brands have shown. Both True Browns and Avishti have scaled up more than 10x in the 1 year after they became part of GOAT. So Imara has huge potential to grow online. We have also launched these ethnic wear brands or Indian wear brands to the global audience. So the True Brown store is live for US customers, and therefore Imara will go that way.
So that is the plan with most of the brands in your portfolio. Okay. So with these 5 acquisitions, 2 we know of. Could you tell us a bit about the other 3 that are in the pipeline or to be announced?
Yes. So we announced 5 brands. All these 3 brands are in the fashion, home, and BPC space.
Okay.
So we announced one in home, which is Chumbak, one in fashion.
Yeah.
The other 3 are again in these spaces. So at least one of them is in the beauty personal care space,
Okay.
and the other 2 are in home and fashion.
So with this, your portfolio grows to 20 brands. Are there more in the pipeline, say in the next year or so, or what is the near-term target? How many brands would you hold?
Yeah. So Goat started a year and a half back, and our first acquisition happened around November, December of 21. So in a short period of 12 months, we have already at 20 brands. And we have a very strong pipeline because we have been looking at category by category, all the brands that we believe fit into our thesis, that brands with great founders, great online business, and where we believe we can bring the strengths that we have created in Goat to good use with these brands. So a strong pipeline, we'll keep acquiring while we are targeting at least 1 to 2 acquisitions every month. But then it depends on the pace at which we get good brands.
So what would that yield? 1 or 2 acquisitions each month? So that's 24 to 48
about
acquisitions
15,
each year?
Yeah, about 15 to 20 every year.
Okay.
But then again, depends on whether we have the right brands, we have founders who are ready to partner. So a lot of those things have to come together.
So you're talking about huge expansion plans. So let me ask you this. You've raised about $50 million 6 months back. How soon will you have to raise money again to keep pace with these plans that you have?
Yeah. So yes, this is a business which has one part which is growing the existing set of brands, which does not need that much capital, because with a Goat kind of structure, you are sharing a lot of cost and their economies of scale. But for acquisition, you need capital.
Yeah.
So we are constantly in touch with the investors and having those conversations. Yes. So it has to be timed with enough money in the bank.
But can you predict
yes,
you're going to be a $1 billion revenue company in the next few years? That's what you're targeting?
Yes. So it's the idea is to create Goat as a platform where you can constantly acquire good brands, give them the power of economies of scale of the back end, and all the expertise that we have built in brand marketing, digital marketing, and all the new age brand building that we have created. So the way we are building it, the number of brands, we are not constrained by the number of brands which come on board, because we are building it like a platform. And therefore, the only thing is finding the right brands where you have a good founder, a good brand, and then ability to raise funds to be able to keep acquiring. So therefore, yes, so 2 parts of our business. One is the 20 brands we have in our portfolio, huge plans for them to grow them. Last year, our brands have grown upwards of 70% from a year back, year on year. So this set of 20 brands the target would be to grow them.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.